Hello everyone, welcome back to Learn How to Trade, where we teach you all about crypto, forex, and binary trading, and we give you strategies you can use to make massive profits from trading crypto, forex, or binary. And today I will be giving you a free strategy you can use to make massive profits trading forex. Massive profits trading forex. Of recent, I've been dropping lots of free signals and I've been doing live trades on my accounts. And you probably want to learn, you want to know how to trade forex by yourself. You don't want to wait for me, you just want strategies you can use to make money. I already made a video on how to place buy and sell order on forex. So all you have to do is to look below. I'm going to drop the link there. Look below, watch the video on how to trade, on how to place buy and sell order on forex, and then you use this strategy to make profit. But before I go into the details of today's video, I want you to do something for me. Look below, click on the subscribe button. It's not going to take anything. Click on the subscribe button. It's not going to take extra data. And please like this video and drop a nice comment. If you want me to make a video about a strategy, you can ask anything, and I'm going to make a video about it. So let's head into the details of today's video. So here is MT5. Here's MT5, and this is boom 1000. I'm actually going to teach you the strategy. I'm going to teach you how it works on boom and crash and how it works on volatility. Yes, because most times some strategies don't work exactly the same way on boom and crash and volatility. Boom and crash are actually similar, that's why I am joining them together. So some strategy works perfectly on boom and crash, and when you try to use them on volatility or step index, other indices, it's not working fine. So I'm going to teach you how the strategy works on boom and crash, and I'll teach you how it works on volatility. So if you decide to trade volatility, you know how to use it. If you decide to trade boom and crash, you know how to use it. Not everyone loves to trade boom and crash, but I am a lover of boom and crash. And the particular strategy I use for boom and crash works on any pair. It works on any indices, any pair. It works on gold, it works on volatility, it works on currency pairs. That's why I always say my strategy is 99% sure. But I'll be giving you a strategy you can use to make profits. So I made a video on how to add indicators. I explained what indicators mean. I'm going to drop the link in the description. Just click on the link and go and watch the video. So this strategy, all you have to do is to add. Firstly, I'm going to add the 200 MA moving average. I'm going to add the 200 moving average. All you have to do is to come here, you change the period 200, you change the pixel, and you change the color to yellow, and you add change the color to yellow and you add. I'm going to add another moving average. I'm going to add 50. You change the period to 50, and then you change the pixels to 3, and then you change the color to pink. Done. So here's the yellow moving average. I'm going to add another 2. You add your MACD. You change this to pink, and you add your levels. Actually, it's going to be like this. It's going to be this way. So all you have to do is to click on the plus sign, and then you add 95, and then you add 5. You go back, and then you click on done. And you're going to have this. This is what you're going to have on your chart. on your chart. So without explaining, without telling you how the strategy works, you will notice something. You are going to notice something. Yeah, you're going to notice something. So this pink line here is the 50 moving average. This pink line is the 50 moving average, while this yellow line is the 200 moving average. Actually, the 200 moving average is used to know the trend of the market. I use the 200 moving average to know the trend of the market, uptrend and downtrend. I probably will make a video explaining that. If I'd already made a video, then I'll post it. I'll post it before posting this one. Like if I can make a video after this, I'm going to post all about uptrend and downtrend. So, or I can easily explain it here. What uptrend means is when the market is going up, and what the downtrend means is when it's going down. So we call the uptrend the bull market, and then we call the downtrend the bear market. So the 200 MA is used to differentiate between an uptrend and a downtrend. So how to use the strategy? How to use the strategy? Like I said, the pink line is the 50 MA and the yellow line is the 200 MA. Now, if you noticed, whenever the pink line crosses the yellow line, whenever the 50 moving average crosses the 200 moving average, either upward or downtrend, the market follows it. The market follows it. You can see this is the first crossing we're seeing here. This doesn't happen often. That's just the thing. It doesn't happen often, but whenever it happens, okay, let me use this first. Aha. Whenever it happens, it's always like it always goes down. It always follows the trend. Now you can see the crossing happened here. The 50 MA crossed the 200 MA, and you can see what happened afterwards. It has been going down. Even if there was a little retracement, here, and it still continued. And it has been going. I'm going to look for, let me look for another one. I think this line isn't helping much. I'll just use the other one. So let's look at this. You can see here it crossed it upwards, but this is you trading the spike. I would give you another strategy you can use to trade the spike. Whenever it's going in the direction of the spike, I would just advise that you ignore it using the strategy. I'd advise you ignore it using the strategy. I'm going to give you a free strategy you can use to trade spikes, like if you want to trade spikes. But using the strategy, I would say you just focus on the retracements. Yeah, focus on the retracement. Now look at this. The 50 MA crossed the 200 MA. Look at it here. The 50 MA crossed the 200 MA and it was going down. You can see it crossed it here. From here you can see how many candles that went down. For me, I don't take more than 5 candles. I don't take more than 5 candles. Most times I take just 2 to 3 candles. I don't take more than 5 candles. So yeah, it crossed it here. If you had entered there, you would have taken 5 candles and you're out of the market. But if it's a small account you're using, I would advise you take just 2 to 3 candles. So here it did that, and then there was a retracement. You can see it spiked up, but it continued going down again. You can see it continued going down again, and it will keep doing this till there is another crossing, which is this. There's another crossing, which is this. So I'm still going to go. Okay, let me just stop there. Then let me now teach you how it works with this MACD. Let me teach you how it works with this MACD, because the MACD is like let's just say like a confirmation. The MACD, you can use the MACD, this MACD, to confirm. Now whenever, just looking at the MACD, whenever there's a crossing, you have to confirm if it's at the overbought or it's at the oversold. Now the 95% I asked you to add when you were adding the MA, which is this. Let me show you this. Let's just write it there. This is the overbought. and this is oversold. Now what does overbought and oversold means? It's that point where the markets, like people have been, when it's overbought, people have bought that particular indices so much that there has to be a coming down. You get, like, the orders, they are very much that it has to retrace, it has to go down. For the oversold, people have sold so much that it has to go up. You see, when it's at the overbought or oversold, there's always, let's say, 80% chances of retracement. There's always 80% chances of retracement, except the trend is certain that the trend is going down or the trend is going up. Then it will keep doing that without any retracement. Without any retracement. Now you can see that, yeah, it's at the oversold region. It's at the oversold region. Whenever it's at the overbought or at the over whenever you're using the strategy, what you should focus on is when it's at the overbought, level, not at the oversold level, because you are not trading the spike. You're not trading the spike. Though this particular strategy can help you at times, like it could catch spikes at times, but this strategy is not for catching spikes. This strategy is not for catching spikes, it's for trading the retracement. Now you can see here, not there. Let's look at this. Yeah, this particular spot. No, do not use this zoom level. Do not use this zoom level for this strategy. Do not use that zoom level. Now at this particular spot, yeah, this particular spot, you can see that it was not at the overbought. It was not at the overbought level, but afterwards you can see that it went up to the overbought level. You can see it here. It went up to the overbought level. It went up to the overbought level. This is a perfect entry spot. This is a perfect entry point. When you enter here, now after entering here, let's see how many candles it made. It entered there. You can see, how many candles. Okay, let's go look for another spot where there was a crossing. That was a crossing upwards. We're trading the retracement. The retracements are downwards. For boom 1000, the retracement is downwards and the spike is upwards. So here there was a crossing. You can see there was a crossing here, but if you notice, it was not at the overbought region. It was not at the overbought region. That's why you can see that it spiked. You see, it spiked. Like, it was not a long trend. Now if you are to enter this particular spot, you have to take 1 to 2 candles. You have to take 1 or 2 candles. Yes, because the MACD wasn't giving an entry point. But when you go forward and look at this, at when it was at the overbought region, there was no crossing. Like, there was no crossing of upwards. It was still that first cross that went downwards. This is the perfect entry point. Now let's check afterwards. You can see it continued going down. Even when there was a spike, it didn't spike up to your entry point. It continued going down. But as usual, I would tell you, just take 5 candles and leave the market. If you have a very big account, you can increase your lot size and make money with just that 5 candles. But if you're using a small account, then you reduce your lot size and try to build your account to where you can increase your lot size. Use proper risk management. I'm going to make a video explaining what proper risk management is, and that is it. If I keep scrolling backwards, you see that it keeps happening. You see here, there was a crossing upwards. That's for the spike. There was a crossing upward, but it didn't happen. There was a crossing upward, but it didn't happen. To tell you that this strategy is not for It's not for spikes. It does not. It have like it supports it at times, but not every time. This strategy is just for trading retracement. You can see here there was a crossing and it went down. There was a crossing. Like, this is a perfect strategy for you to use, and I'm giving you this strategy for free. I'm giving you this strategy for free. I created this strategy myself. I'm giving it out for you for free. No trader will create a strategy and give it to you for free. Trust me. No trader will create a strategy and give it to you for free. They always want to collect something. The strategies they give you for free are strategies they get from others, but this one I created it myself. So guys, use the strategy and make massive profits trading forex. You can use it for boom and crash, you can use it for volatility, but I'm going to explain how it works on volatility in the next video, not on this one, because this video is long enough. I'm going to do another video where I'll be explaining how this particular strategy works for volatility indices. So guys, make sure you subscribe to my channel. And if you want free signals, free 99% sure signals, join my telegram group. Link in the description. Do not forget to like this video. Do not forget to drop a comment. I'll see you guys in the part 2 of this video where I talk about volatility indices.